how Donald Trump's tweets move the economy and why information is the currency of market prices. In today's video, we're diving into the wild world of Donald Trump's tweets and how they had a surprising effect on the economy during his presidency. We'll also explore why information, not gold, not oil, but information, is the true currency of market prices. So buckle up and let's dive into the power of 280 characters, how tweets became market movers. It might sound absurd that something as simple as a tweet could move the global markets, but let's break it down. When Donald Trump took office, he became the first US president to use Twitter as a primary communication tool. He tweeted frequently, on everything from trade deals to oil prices to foreign relations and the stock market. Now, here's where things get interesting. Many of Trump's tweets had immediate effects on stock prices, bond yields, and even currency exchange rates. For instance, a tweet about trade tariffs could send steel stocks plunging, while a tweet about a potential deal with China could send the Dow Jones surging. And it wasn't just his positive tweets either. A single negative tweet could send the markets into a downward spiral. For traders and investors, timing is everything. And Trump's tweets provided a treasure trove of timely information, sometimes even before official policies were announced. The role of algorithms and trading bots. But how can a single tweet have such an impact? Well, it's not just human traders reacting. One big reason Trump's tweets were so powerful was the rise of algorithmic trading. In today's markets, many hedge funds and institutional investors use high-frequency trading bots, sophisticated computer algorithms that monitor news, social media, and public statements, and then execute trades within milliseconds. These bots are designed to read the sentiment behind news and tweets, acting almost instantly on any positive or negative information. Let's say Trump tweeted about escalating tensions with China. The bots would immediately pick up on words like tariffs or China and place trades accordingly, often faster than human traders could even read the tweet. This immediate reaction can lead to wild market swings, creating volatility that sometimes lasts minutes, but can also set the tone for an entire day on Wall Street. Why information is the true currency of market prices. So what does this tell us about how markets work? Well, it points to an important concept in economics. Information drives markets. When we think of market prices, we usually think they're based on supply and demand, right? But more fundamentally, they're based on information, what people know, or think they know, about the future. Let me give you an example. Let's say you hear news that a major tech company is about to release a groundbreaking product. If you buy shares of that company before the news goes public, you're betting that the information will cause the stock price to rise. The new information will influence how investors value that company, which then drives the stock price up. This is exactly how Trump's tweets worked. They were tiny bursts of information that traders and algorithms used as market-moving events. Whether he tweeted about policy decisions, international trade, or even corporate announcements, each tweet introduced new data that the market hadn't previously factored in. The power of perception and sentiment. What's fascinating is that sometimes the content of Trump's tweets didn't even need to be grounded in facts or formal policy changes. Just the perception that something was going to happen was enough to move markets. Markets are emotional places that are highly sensitive to investor sentiment. Even if Trump hinted at a policy change that never materialized, traders would act as though it were imminent, causing price fluctuations. This phenomenon shows that markets react to the expectation of future events, not just the events themselves. This is why sentiment analysis, tracking how people feel about news, social media, and public statements, has become so crucial in today's market. It's not just about what's happening, it's about how people feel about what's happening. Real-world impact on companies and economies. This dynamic had real-world effects on companies and even entire industries. Take the trade war between the US and China as an example. Every time Trump tweeted about imposing tariffs, it directly impacted companies that relied on Chinese manufacturing, like Apple and Ford. Stocks would plunge or rise in direct correlation to what he said online. And the ripple effect didn't stop at stocks. Trump's tweets affected everything from commodity prices, like oil and soybeans, to currency markets. A single tweet could send the US dollar soaring or sinking. The impact of this was so significant that some analysts began to jokingly call it the Trump tweet effect. But for many traders and companies, it wasn't a joke at all. It was a critical factor to monitor daily. Wrap up and final thoughts. So, what have we learned today? Donald Trump's tweets were more than just political commentary. They were market signals. His ability to move the economy with a single post showed us just how much influence information, even in the form of a tweet, has over market prices. In the end, it's a powerful reminder that in today's hyper-connected world, information truly is the most valuable currency in the market. And as we look to the future, monitoring key information flows, whether from social media, news, or financial reports, will remain critical for anyone looking to stay ahead in the financial game. Thanks for watching. If you enjoyed today's video, hit that like button, subscribe, and leave a comment below on what you think is the biggest influence on markets today. And don't forget to turn on notifications so you never miss out on future finance insights. See you next time.